Welcome to this video. Today we're going to talk about Alibaba, my favorite stock, ticker symbol BABA on the New York Stock Exchange. Let's look at the charts. Here we can see that it was in a very long bear market, many years, and it finally turned into a bull market, which is very interesting. After a long time, the tides seem to turn. If we look at year to date, we can see it's over 41% with higher highs and lower lows. And here we can see in this article that Alibaba posts fastest revenue growth since 2023. Alibaba's core business reignites growth as AI strategy delivers strong results. And here's a picture of Qwen, which is basically the equivalent of ChatGPT. And it kind of looks like this. Pretty similar. It's not as high level as ChatGPT, but it was released only 2 years ago in April 2023. And there has been a lot of growth and they are investing heavily in AI apparently. So what's going on with Alibaba? Let's find out in this video. So what's Alibaba? What does it do? Alibaba is empowering a business through technology and innovation. It is one of the biggest e-commerce companies based on gross merchandise value. It also does cloud. It has integrated logistics, payment systems is big, like with Alipay, and they have a massive global reach. And now they're really investing heavily on the AI development, which can accelerate growth in their company. They also have like a really long-term vision in the business. They really think long-term, which is a really good thing, I think. They want to survive for 3 centuries because they started in 1999. Here you can see their values, what they do. And so they are basically a massive e-commerce giant, and now they're leveraging AI to become even bigger. So we know that Alibaba is one of the largest e-commerce companies based on gross merchandise value. But how strong is its economic moat? How well is it protected against competition? Well, let's find out with this economic moat finder. We can type in here the ticker symbol. And we can analyze Moat. And we can see that it's an overall Moat score of 9 out of 10, which is really strong, especially in network effect, cost advantages, and efficient scale. Well, the network effect is because everyone uses Alibaba. That's why people use Alibaba. It's kind of the same with people watch YouTube videos. People are on YouTube because everyone is on YouTube. They have a cost advantage and efficient scale because they're so large right now that they can do everything very efficient, which reduce costs, which other companies cannot do so easily on this scale as Alibaba can. They started like in 1999 during the dot-com boom, so they catch the whole internet thing was and now it's AI, and they try to catch and I believe that they can catch the AI boom as well and profit more in the future. But overall, the economic moat score is 9 out of 10, which is great. So is Alibaba a financial strong company? Well, here if you have a quick overview on Guru Focus, we can see financial strength 8 out of 10. Profitability rank also an 8 out of 10, and the growth rank also an 8 out of 10. The momentum rank is like more for technical analysis. This is like the value, so they don't think it's so cheap. So is it expensive or is it cheap? Let's first look at the PE ratio. Here we can see the historical PE ratio of Alibaba. The lower bar from the tree is the PE ratio, you can see here. And we can see that 10 years ago it was 30, then it was 15, 18, and went up, 40, 40, 50, 40. Here on highs was 85. And we can see that right now it was on the lowest here a year ago or something. It was 12, now it's like 17. So based on the average, it's pretty low actually for a tech for a big company like this with potential growth upside. I think a PE ratio of 17 is cheap. So what's the true value per share of Alibaba? Let's look at this intrinsic value calculator. I filled in all the numbers which you can find on financial websites like TradingView and Finviz, but there are also many other websites you can find these numbers from. We use basically owner's earning, which is based on Warren Buffett's IDs. He talked about owner's earnings, which is basically the net income that's really for the stock owners. And the formula is basically the net income plus depreciation and amortization minus the capital expenditures plus minus the change in working capital. And this number we use for a discounted cash flow method to calculate the true value today. And this calculator does 20 years. So you discount all the future cash flow to today's with a discount rate of 8%, and then you have a true value of the whole company. You divide it by the shares outstanding, and you have the true value per share in dollar amounts. I like to use TradingView to find these numbers like net income, because everything is nominated in dollars and not in Chinese yuan, and it's with the currency thing, it's easy to understand. These are the results. I think because of this AI boom, that many companies will capture massive earnings growth because of AI. It will make businesses efficient, and I think that Alibaba still has a strong monopoly position. And so I think it can grow with 20% in the next 5 years. And then after 5 years, it will grow with 10% per year. So let's calculate the intrinsic value. And we can see here that's undervalued by 48.98%. So potential upside 96%. And the true value per share is $225, $226, based on this calculator and the numbers that I put in. So we can see here the earnings is 15 billion, total intrinsic value half a trillion, and the intrinsic value today is 225,000. So we know the PE ratio is at an extreme low. We know the value based on these numbers, based on 20% growth rate, based on owners' earnings. It's still cheap and undervalued. So let's look at the charts right now. We're now looking at Alibaba on TradingView. Let's look at the price. It's now trading at $119. And we're now looking at weekly candles. And we can see that it went IPO like 2014. And we can see that the price is pretty much the same. It's a little bit higher than at when it started over a 10-year period, which is crazy. So it didn't really grow at all. What's interesting, if we look at the revenue, it started like in a year with 12 billion revenue, 15 billion revenue, and now it's 138 billion revenue, which means that the revenue increased more than 10 times over 10 years. But the stock price is pretty much the same. How is that possible? Well, there were so many political risks. There was tariffs. There was risk of delisting, regulations from the government in China, the Evergrande crash, the real estate crash that triggered a lot of Chinese stock to go down. But now it seems to recover a little bit. It's now trading above the 200 simple moving average, which is a very bullish signal. But yeah, very interesting that the revenue increased 10 times and the company didn't grow at all. Like if you bought here, to me it looks like it's kind of boiling up, and eventually a great company will explode higher to the upside. Let's look at the daily candles. We can see here that it went in a massive, I will remove the revenue first. We can see here that it went in a massive bear market here. There was a sell signal 2021. And yeah, it went in a bear market. There were a lot of panic, delisting, Evergrande, the CCP, everything. And now it seems to, there was a bullish signal here. And now the trend seems to have changed. Like people seem to be optimistic now. And year to date, it's over 41%, which means that, there's a lot of momentum going on here in this stock, which is very interesting. We looked at the intrinsic value and we find it at like $250, but let's say 225. Let's put it at 220. So I think that this year it will probably go at least to 220, because we are following this strong technical trend with a strong fundamental. So 220, I think is definitely possible this year. So yeah, it's now trading at $119. I think in 2 years or something, we can. This is just my prediction. I think we can go to $500 in around 2 years or something. Yeah, $500. That will be realistic, in my opinion. So that's my prediction. I hope you enjoyed this video. Always do your own research. Keep your cash reserve, always important. And let's hope the best for Alibaba. And I'll see you in the next video.